Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for October 17th, 2018. Well, what an amazing move we had yesterday. Big rally in the market, and the bulls just kept pushing and pushing and pushing all day long, pushing that market up. If we take a look at a 15-minute chart, you can see how that played itself out yesterday. There's the big gap up, and then we just continued to grind and push back up. Now, as great as that is, we do have some things we need to worry about here. First off, we moving 547 points or something yesterday in the market can certainly bring in some profit takers. So don't be surprised to see if we get a little bit of selling, a little bit of profit taking going on. But at the same time, if we do happen to continue to move up, let's make sure that we realize that we are going to be running into that 50-day moving average resistance. There's a price pattern out there that we call the blue ice failure pattern at hit run candlesticks and right way options. And that is, that is a failure of the 50-day moving average and a rally back to it. And what we'll be watching for is any kind of a failure pattern here to occur. That would be, bearish engulfing, shooting star with follow through, whatever that is. They look very similar to this right over here, where we drop through the 50-day moving average, rally back, and then we get this failure. Okay, this failure can typically take us to new lows or a retest, of the past lows like we did back here in February. So kind of keep that in mind. I'm not trying to predict that that is going to happen, only that the possibility does exist. And so we'll want to watch that resistance area up there. Remember, really nothing has changed that created the sell-off. So why should we expect it's going to rally straight back up? Just keep that in mind. So the other thing I want to bring up today is something I covered in the morning note. And by the way, if you haven't read the morning note, there's always a link in the description to go read the morning blog report. And I talked about holding on to your edge. You know, sometimes we as traders get all caught up in the drama of the day, everything that's going on, and we trade when we don't have an edge in the market. You know, at the end of the day, there's no honor in fighting a market where you have very little chance of winning. So if you don't have an edge, you don't lose anything by standing aside and waiting for your edge to return. You do not have to fight when the odds are set against you. Now, I'm not suggesting that the odds are set against you today or any day, but I will tell you that so many people lose money because they feel it's necessary to trade every single day. If the market's open, I have to trade, and that is just not true. You can stand aside. You can wait for your edge return. Remember, the winner is going to be the person at the end of the day that traded wisely and held on to their capital and grew their account, not the one that did battle against the monster every single day when they had very little chance of winning. So think about that as you plan your trades, and be really careful about how you might approach a market that not only has the volatility of this major sell-off, but also has the volatility of fourth quarter earnings season. Okay, so think about that. So as we rally back up, we want to watch those resistance levels up there for those potential failures. Let's look at the SPY here real quick. SPY, bouncing off that 200-day moving average, moved up here to this substantial resistance area right through here and was able to break through. Now, it's going to be very important that we hold that level. If we can stay above and hold that level, we could be in pretty good shape for more of a move up. But if we slip back below that level, be very careful to watch for a failure right in that substantial resistance area. A lot of work has to be done to recover here in the SPY. Notice how far we are away from the 50-day moving average. There is a lot of work yet to do before we are looking at a bullish chart here. Let's take a look at the Qs. The NASDAQ rallying back up sharply, and this morning we have a little bit of benefit in the NASDAQ because Netflix reported just an absolute blowout earnings report, and really strong. So as we approach these resistance levels, or at these resistance levels, we're going to have to watch them closely, but good earnings reports can certainly change the look and feel of this market very quickly. So any rally between here, maybe up into this area right in here, is where we're going to have to watch for those potential failures to occur, those profit takers to come back in. So just keep that in mind. Let's take a look at IWM. And the poor IWM, even with that huge rally yesterday, had a nice move back up, but notice we're just coming up to test the 200-day moving average. This is not a bullish chart, and there is a tremendous amount of work that needs to be done here. A rally back up into here, we want to watch for that potential failure, so be careful. And please keep in mind, this morning we are gapping down slightly. You can see we're gapping down here in the IWM. We're gapping down in the diamonds. Nothing huge, just a little bit of profit taking after such a big run. At the moment, Dow is looking to open 100 points below where it closed yesterday. So after a 540 point move up, a 100 point pullback, really not that big of a surprise. However, if the sellers kind of take over here, if the bulls don't defend, if the sellers kind of take over here, we could create that failure pattern right in here, and that's not what we want to see for any kind of recovery. That could mean a retest of the lows is on the way. So with that, let's take a look at the VIX. Now the VIX had a really nice pullback yesterday, dropping back below this little level of support. We'll watch this area in here. Any bounce in this area could create a problem for us, but if we can continue to slip down in the VIX, we should be okay. Fear is subsiding a little bit. That's helping out the implied volatility of options, but as that continues to slip, we'll want to watch for that potential bounce. That's a pretty substantial pullback, and we could get that bounce anytime here. So watch that close. If we take a look at T21.22, T21.22, the 4-week new high, new low ratio, you can see we made a major recovery yesterday. Come up out of this low, very strong, and recovered a tremendous amount in the T21.22. Now, what that tells us is that we now have, plenty of potential for this market to move lower again and back higher. So all we've done with a really substantial one-day move is put us in a situation where we could see that profit taking, that place where we could turn lower. Okay, so watch that closely. We still have significant upside potential, but we also have opened the door for a significant pullback as well. Let's take a look at the economic calendar. Economic calendar, we have a few things that could move the market around today. First off, we have the housing starts. The housing starts are expected to pull back just a little bit, but permits are expected to grow. So I don't expect that report to really move the market around much today, unless there's a big surprise in the number. We have the EIA Petroleum status report. Obviously, that can move things around, particularly in the oil sector. If we happen to see a major build in supplies or a major decline in supplies, that can move those prices around. We have a Fed speaker today at 2:10. But I think one of the things we're going to be watching for is this 2 p.m. Fed minutes release, because that could give us a little insight into the Fed. There's an awful lot of worry about the Fed raising rates too quickly, maybe damaging the market. So we're going to have to kind of keep an eye on that report. On the economic calendar today, we have quite a few companies reporting earnings. We're up there past the 60 mark, companies reporting earnings. Really too many to talk about or display, and that's only going to increase over the next couple of weeks. So please make sure you make a habit of checking earnings reports. You know, when you look at a chart and you're thinking about making a trade, make sure you're checking that earnings date, finding out when these companies report, because the last thing we want to do is ignore that and end up being surprised with a stock that gaps heavily against us in a trade because we didn't pay attention and do our job as a trader. One of the things I commonly say to my group at Right Way Options is that the market rarely rewards laziness. So do the job, do the work, get in there and dig that information out, because the more you do, the better prepared you are to trade wisely and not let the market kind of have its way with you. So with that, everyone, I want to wish you all a fantastic day, and I want to wish you great profits. And hey, folks, if this is something you enjoy, if you feel like you're getting some good information out of these videos, please do me a favor. Click that subscribe button on YouTube. And also, if you happen to watch this on Facebook, click those thumbs up buttons. I really do appreciate that. Also, please click that subscribe button and follow me button. And please feel free at any time to share this video with any friends and family. I really do appreciate it. Your comments have been very nice and very kind. I really appreciate those as well. And I do try to answer as many as possible. So if you could, do me a favor. If you have any ideas on how I could improve or things that I could do with this video, something that you would like to see in these videos, I want to be responding to you and giving you good quality information. If you have a suggestion, please feel free to leave it in the comments. I'd like to hear that. Everyone, take care. Have an awesome day, and I wish you a great, great profit. Take care.